So good afternoon, everyone. My name is Maurya Hanspal, and in this session, I'm going to talk about the continuation on the mutual funds. So the previous sector, we had a discussion on the based on sector and industries. Like if you're like particularly investing into one sector, like for example, if you invest into the banking sector, the banking sector might benefit like when you have the rise in the interest rates. Your real estate sector can benefit like when you have the housing demand. But IT sector was also benefiting a lot at a certain point of time. A fast moving consumer goods like they benefit like most of the time. The pharma sector like benefits in terms of a pandemic and all like COVID. So like these sector, like when someone is investing into these themes, we call it as a concentrated diversification basically. But again, as I told you in my previous examples as well, the biggest drawback of the concentrated diversification. Like for example, if before this COVID-19 pandemic, if anyone had invested only in the stocks of the hospitality sector, the whole value of the portfolio would have turned into negative because the sector was into the negativity. Okay, so that's why it's not only beneficial to like invest into like one sector only. Then they talk about like based on themes. Like for example, some new themes are coming up in the market. Like when we talk about the infrastructure theme, so all the companies which are into the infrastructure theme will be like benefiting with the same. Of course, the real estate companies, and not only the real estate companies, the construction companies. And the real estate companies की मैं बात करूँ, your Godrej Properties, your Gujarat Properties, your Purvanchal, your DLF, your Lodha Developers. So all these companies will be benefiting. But they also need help from the other allied sector. Like for example, they need help from the L&T. Like when they're making roads, highways, infrastructure, properties could be. Like they need cement, JK Cement, and all those companies would come into place because ultimately the cement is being used for the housing purposes, right? Also, also they would require paints, Asian Paints, Pidilite, Berger, Indigo, because the demand for the paints would also be there. Then the demand for metals would also be there. So steel, aluminium, copper. The logistics sector would be there for transportation and all, hardware sector. So all these like would be essential for that. We talk about the clean energy theme, the renewable energy theme. We people can have Suzlon Energy, Borosil Renewables, Tata Power, Tata Green, Adani Green. So all those companies which are into the clean energy theme, solar theme, hydrocarbon, that's a theme. The most trendy theme which we can talk about nowadays, we would talk about the EV theme. We have the EV theme nowadays. That is like being trending into place. So all the companies which are supporting the EV theme, your batteries, your auto component, like for example, Sona Comstar, your Tata Group has occupied the whole space in terms of EV. Tata Motors for the manufacturing of the vehicles, right? You have the Tata Power for the battery generation purposes. On Tata Green, you have for the purpose of battery making. You have Tata Elxsi for the purpose of the IoT technologies. You have Mahindra for the purpose of the e-rickshaws and three-wheelers, and like even for the buses also. Also, like what do you have? You also have JBM Auto for buses and all. You have the Minta Industries. You have KPIT Tech. So all these companies are either manufacturing the components of or like the batteries of these things of the EV theme basically. Investment style we talked about the active and passive. Then we can have the value funds. So value funds are the open-ended equity funds can be like classified into the value funds and the contra funds. So value funds are that seek value from the company, like which are like not like recognized as for now, the companies which are not yet recognized as for now, but those companies that have a future value, future growth rate, future profitability, cash flows in future, and can give good returns to the investor. But certainly in the case of value funds, the biggest drawback is the investor might have to wait for a long period of time. Contra fund, they go against the strategy of market. Like for example, if like everyone is being bullish, like they'll be bearish. If everyone is being bearish, they'll be like bullish. Then you have some dividend yield focused funds. So in dividend yield, these are those funds like which invest into those companies which give you a promised dividend or a stable dividend. Basically, the PSU sectors come into these plays. Then you have the focus funds. So focus funds has fund that has a limitation to the number of stocks as 30. You're focusing on one particular sector or focusing on just 30 stocks. Then you have the ELSS, equity linked savings scheme. It's again a good investment because like what basically happened, it's having a lock-in period of 3 years. and you are getting a tax deduction of 80C में up to like 1,50,000. And at least 80% must be held in equity and equity related instruments. That is one of the benefit which the equity linked saving scheme is giving you all here. So that you need to understand while talking about all these schemes. Then you have diversified versus concentrated fund. As I was giving you the example. In case of a concentrated fund, we're just investing into one particular industry. एक particular industry में पैसा लगा रहे हो, unconcentrated fund वो हो गया. Like for example, you are just investing into the IT sector only and like no other sector. So that's a concentrated fund. You can have a diversified fund. Like instead of just investing into one sector, you are investing into varied sectors, right? Then the equity mutual funds can be a multi-cap mutual fund, which comprises small cap, large cap, mid cap. A large cap mutual fund that just comprises the large cap companies. Large and mid cap fund that comprises both the large and mid cap companies. And only mid cap fund which comprises just the mid cap companies having a market capitalization from 5,000 crores to 20,000 crores. A small cap fund having a market capitalization of less than 5,000 crores. A dividend yield fund, as we talked about, the fund that gives you the dividend. Value fund or contra fund, focus fund, sectoral or thematic funds, and ELSS. All this we talked about. Index funds, we all know. Index funds क्या होते हैं? And what do we mean by index tracking? So what basically happens if the index, like for example, if you have invested into a passive fund or an index fund, and that is giving you a return of 15%, but your portfolio manager, he gives you the return of just 14.98%. The 0.02% is the index error in a negative manner. Whereas if he see, obviously, like he cannot give you the return of more than 15%, right? Then you have the exchange traded fund. So what happens in an exchange traded fund? It's like a mutual fund or an index fund, and you get the basket of stocks. But the difference is you can buy and sell the ETFs on the stock exchange, and they're listed on the stock exchange. And you get the current NAV, and you do not get the previous NAV. In the case of the mutual fund, like you'll be getting the previous NAV. In case of an ETF, like you'll be getting the current NAV. Like you need to have a demat account for this, and obviously, like you won't be having the facilities of systematic transfer plan or systematic withdrawal plan and all these things. That's an ETF. And again, the expense ratio of the ETF is lower than your index funds. Then potential advantages are they trade continuously like stocks. As I told you, can also be short or purchase on the margin. So what do we mean by selling short? If see, ideally when a person talks about in the market, he talks about like buying and selling the stocks. But अगर आपके पास stock नहीं है, आप still उसको बेच सकते हो. And after getting like return from that stock, you can sell it back to the broker. Just if you have the expectation that the price will fall. Lower cost and tax efficient है. Prices can depart from NAV is the biggest disadvantage, like must be purchased from broker. Then you have the gold ETF. It tracks the gold index. And 99.95% of the investment is done in gold. And banks are allowed under the gold monetization schemes to limit of like 20% of the net assets in the scheme. The banks can just invest like 20% into gold. But now we are having the silver ETF also. The silver ETF has also come into play, which invest 99.9% into silver or like silver related instruments. Okay. That's all for today. We'll talk about some more instruments in the next session. Thank